Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. A lot going on. Lead story of the day around the world is probably the fact that the Pfizer has started rolling out their vaccine. We have a confirmed case of somebody getting the vaccine outside the trial. That's big news for the world, but for us this morning, our biggest news is this Tesla offering. There was an SEC filing last night that they have filed for an up to $5 billion offering. So we're going to talk about that and the reaction to that in the stock and the overall market. Some other headlines on our radar: earnings, of course, Stitch Fix, Toll Brothers last night. We had some other offerings, actually. GrowGen had an offering. Raytheon announced a buyback. And I'm watching Disney because their investor day is in 2 days. Our guest today is Michelle Krebs. She's executive analyst at Cox Automotive. She will join us at 8:35 to give us a high-level view of what's happening in the auto industry and what's going to happen going forward, at least in 2021. I want to remind you all to hit that like button, hit that subscribe button, and I'm going to throw it to Joel now, and Joel's going to tell us how we're doing in the overnight trading session. Joel.
Red, Spencer. We are red, and I'm not going to say I'm going to reboot my computer because Dennis will get mad at me for saying that all the time, but we are in the red by 17 handles at 73.75. Kind of a weird close. We rallied up, but they didn't like it at the open. Let me bring up the chart here to illustrate what I'm talking about. And we were hanging in there until 4 a.m. and then boom, we got that Tesla offering news. We went down and we just kissed Friday's low. Friday's low was 65.5. Thursday's close right there. Now bouncing up a little bit. Crude getting away from $46. It's down 31 cents at 45.45. Gold in the green by 360 at 1869.60. Silver going in the opposite direction. That's down 3.9 cents at 24.755. And should we talk about a potential top here in Bitcoin? Down $305 at 18,865. That 20,000, that key $20,000 level. Dennis, are they shaking you out? Are you just going to scalp out of this Bitcoin like you do all your other long-term investments?
No, I have no idea how to trade Bitcoin. I'm not a Bitcoin trader. I stuck a piece in the long-term account, and I'm trying not to look at it, so please don't remind me that I own it or I might shake out of it. Let's forget that I own it. Let's just forget that I own a piece of Bitcoin. Yeah.
All right. So did you get up at 4 a.m. today?
No, but I looked at my phone and I saw Tesla trading I saw trading this morning around 6:65, and I was like, oh, it's going to be another one of those days. And then I got back up and I was like, oh, Tesla's getting rocked. What's happened here in the last 2 hours since I've been sleeping? Spencer Israel knows.
Right. It's funny because there was actually two headlines. The first headline was that they had achieved record auto sales in China in November. That was overnight. And then this morning was the one that actually matters here: a $5 billion equity sale. No more details other than that. It's being led by Goldman Sachs, but we don't know anything about the price or when. But $5 billion, essentially a secondary offering. They're raising money when they can, not when they need to. Wow. And that is what's happening with Tesla.
There you go. I mean, this is what we're seeing on a lot of the high flyers right now. Companies that are growing, they need to raise money. They are doing it in smart ways. Tesla wasn't the only one last night. We also saw Grow Generation, GRWG, with a secondary offering. Signet was another one, although I'm not sure the Signet offering was not to grow or to survive, maybe. There was SGMS was another one. We're getting these offerings on a regular basis. That one night, like I said, we had over a dozen and a few major companies here, none bigger than Tesla. So obviously dilutions, slightly dilutive, not to an extreme level here, but that knocks the wind out of its sails for now. I think it gets bought. I think we see what the offering price is. I believe that will act like a floor. Obviously, I called the breakout on this one for the last couple days. It took a couple days, finally did go. I think if I was shorted, I would be buying the pullback. I still think we're going to march up into the S&P ad on the 21st.
We hit 669. We were trading up, and then you see that big.
So you already got a dip here. It's down $10, and you got a big dip here to buy.
Yeah, and then you got.
I don't know if I'm buying it, but
614.79. I don't know. 600. I think, you had all those high. I think maybe 600 to 610 is where they're going to have to. This is just purely conjecture and speculation, but I think they're going to have to do it, a little bit lower than this to get the deal done. Absolutely have no. This is just conjecture and speculation.
I think they'll get the deal done easily.
At where? At 630, 640?
I think they'll get it done above 600. I don't think they'll have to go to 600 for it. You never know though. And when Joel's making a good point, wait until you get the pricing. Get the pricing, because if they pull the rug out from under, you buy it at 631 this morning saying this is my dip to buy, and then all of a sudden, the offering comes out at 600.
Hey, actually,
they're going to hammer it.
I want to amend my statement. We actually, GWS reads pro better than I do, apparently. It actually says it right there in the pro that I just skipped over. The shares will be sold in at-the-market offerings, which suggests investors who buy shares at different times will likely pay different prices depending on the prevailing price.
Okay, well, that throws
right there in the
curveball at us. In any regard, we still have the catalyst of the year for S&P ads. And that's why I can't see, starting a short position here. I think it's going to top out on S&P, obviously on the ad, or maybe the day after the ad, or maybe the day before the ad. But that's when the top's going to be, I believe. I don't think we have seen the top yet. So if I was shorted, I would be covering it into the pullback here. I don't have the guts to be long, and I wish I did.
Have you ever traded an offering like that?
They're all... Yeah, it's the edge. The offerings that I trade are the ones where I got a numerical advantage, where I got a number.
Yeah.
So when I see a number, then obviously that makes everything a lot simpler, because those numbers, the best example might be fuel cell from last week. We talked about the number. It kissed the number. $6.50 was the pricing. It got to 652 and bounced right off it. Those are the trades, the easy setups, not the curveballs. So when you're trying to speculate on, where it's getting done, it always makes it a little bit trickier. So, and then, there's all kinds of different ways to do this stuff, but I like it when I got a flat out number, I see the number, and then I use that as a floor for support, at least on a stock that's growing. On a stock that's, raising capital to survive, sometimes those floors don't hold. But the stocks that are raising capital to grow the company, usually those floors hold, at least more often than 50%. So I have an edge there. If I don't have a number, I don't have an edge, and then I just forget about it then.
Good point here by JC, given that there's a lot of managers who need to buy the stock for index reasons, right? So this is not going to...
Well, that's the whole point. That's the S&P ad. That's what we've been talking about, is all the money that needs to buy the stock for the S&P
So this will help them out a little bit with the
to bring it down?
Yeah.
Well, maybe, but maybe it's going to rip right back in their face too. I mean, one thing to remember with indexers is... you can have people who are trading ahead of it, but the index itself, Tesla isn't in the index yet. So if you're, running an ETF that's buying or following the S&P, and you're putting Tesla in there now, well, you're not mimicking the index for the next 10 days then. So you're supposed to be trying to mimic the index as close as possible. That's why all the buying happens at the last minute. So, I mean, you've got to follow, what your prospectus says. And if you're holding S&P companies that are outside the S&P in your S&P fund.
That's why we say the Friday before, right? As possible. So it's going to be in the index as of Monday, the 21st, which means the Friday before is going to be the day.
That's where the buying pressure is going to happen.
The buying is so.
It's just another. I mean, I thought they were just reaping in the cash, but as Spencer said, one of the greatest investment advice you can give is borrow when you can, not when you need to. So,
we fully knew there was going to be another offering with Tesla, but let's put this in perspective. How many shares are we talking about here?
Not that many, right?
This is not majorly dilutive
$1
here.
billion worth of shares.
How many?
$5 billion.
Yeah, $5 billion worth of shares on a company that's got a market cap of what, 600 billion?
Yeah,
we're talking about less than 1% dilution here. If I'm doing that quick air math correctly,
I think it's moved. I wonder if this is going to get near Google. What's the market cap on Google?
it could be the most valuable company in the world. It's just all nonsense. So why can't it? I mean, at this point in time, it doesn't even matter. You cannot analyze it fundamentally. It's all nonsense. It's all just the momentum. I mean, we're in a momentum market where a lot of stocks aren't basing anything on fundamentals right now. Tesla's the poster child for this. So if you're sitting here and crunching numbers and trying to come up with a target for Tesla, I mean, I don't think you need to. I think it's just all about technicals and all about momentum right now because it's completely disconnected from the fundamental picture. It's got a market cap higher than every other auto company combined. So did you see that tweet last night?
Yeah, I did. I saw your tweet. Yeah. I saw one of your more relevant
and it's making, way less cars. I mean, yes, okay, maybe we're all just going to drive Teslas in the future. I don't believe that. But that's why I don't have the long-term position on in this. But at the same time, I've been trading it from the long side because you know what? It's getting out of the S&P. That's why I was bullish it 2 days ago. Just because it doesn't make any sense fundamentally doesn't mean it can't go higher. It can go higher it's completely disconnected from fundamentals. So if you're using fundamental analysis to come up with a price for Tesla, I think you're doing it wrong. I think you just got to look at what is happening is that it's got to get out of the S&P. These are technical reasons, like on the S&P ad, not talking charts, this needs to get added. So there's going to be buyers, and that's what people are anticipating. And that's what the anticipatory traders right now are doing by buying at 450 and 500 and 550 and 600. They're like, the indexer's got to buy, and we're going to get ahead of them. Now, the question is, does it eventually get so crowded that there's just too many short-term traders that have anticipated this, and can they actually outnumber the indexers? It's going to take a lot of anticipatory traders to actually outnumber the indexers that need to buy. But there is the potential that could happen, and then the trade could turn.
I'm glad you mentioned that. I want to read you a quote here that I saw this morning. This is from Joe McCone. He's the head of execution services at Citadel Securities. You may have heard of them, Dennis. This is what he said. Individual investors now account for roughly 20% of stock market activity on average, and on peak days, they account for nearly 1/4 of trades. And he would know. If anyone would know, he would know.
We're driven. I mean, in the SPAC market, it's going to be way higher than that because you know what? You got stocks like Procter & Gamble that are all institutionally owned, and the traders, Robinhood, aren't trading those stocks. So that brings it back down. There's probably, if he was analyzing individual stocks, and you look at some of these SPACs, it's probably well over 50% individual traders and retail traders. Some of these stocks are completely retail driven. It might be well higher than north of 50%. On some stocks. Retail used to run years ago like 10, 11%. So now that's run 25 means there's twice as much impact from retail traders than there used to be. But on certain stocks, it's much higher than 25%. I'm going to tell you that right now. On certain stocks, it's running, like at a really high rate where it's getting driven. I mean, when you see some of these stocks that, Kramer features, and there was another one last night, and this is a funny story. APG, he featured last night. So he comes on and he says that, this API group is going to be, he's going to be coming up and talking with the CEO of API group. He says this last night on the advertisement at like 5:50. And what happens is API, Agora ADR, rallies. Look at the stock chart of API, Joel. It rallies over $1 in the next few minutes because everybody's like, oh, API is going to be on. No, API is not going to be on. API group is going to be on, and the ticker symbol for API group is APG. So they literally, and there was some volume going. They were buying this API, and they bought it up over $40.50. So it was up over $1 on anticipating that the segment was coming up on Mad Money. And then everybody realizes, when he actually says after 6 o'clock, it's APG group and API group, and he puts the APG ticker. They're like, oh, I bought the wrong stock. And then they start selling off. I tweeted it out as soon as it was happening. I was like, everybody was buying API. That's the wrong stock. And they bought it up to 40.60, and then it came right back down. So APG was the stock that was on last night, and this thing just got stupid too. I mean, it's come back down, but look where this got. I mean, this is a construction company. And isn't it a construction company, I think? I think it do construction. Anyways, it goes from 16.72 close. It goes to $20 on the segment. And then, obviously it was a huge overpay, whoever the hell's buying it up at 20. And it came down 19.18, and now it's 17.75. But I mean, it just shows, how much, you know, retail, and obviously after hours is thin, so it's mostly retail driven after hours. But I mean, you got to be really careful. I want to let you guys know out there, the listeners out there, that if you're just randomly paying up 20% for a Kramer pitch, the odds are you're probably going to lose money. I mean, they're not all going to go up 30% and 35%. So chasing on these illiquid markets after hours, it's one thing to buy it up a couple of percent. It's a way another thing to buy it up 20%, or in the case of APG, I don't even know, it's up $20, $3. Yeah, it's up 20% at that point in time. I mean, this to put that in perspective, in that 10 minutes that the segment was going on when it ran to 20, that's as big of a move as this had over the last 3 months. And it's having it in 30 seconds because it's on Kramer. That's where charts can help you too. Give you some perspective on what a stock can do and what it should be doing. You're paying up 30%, you know, because it's just being pitched on Kramer, and the stock's moved that in the last 3 months. You're probably paying too much. So the person who bought at 20 obviously is down significantly and probably not getting their money back anytime soon.
A couple things to just note on that. First of all, if you were, you know, being aggressive in API, this got, you know, on the sell side, Agora, it got to 40.50, and this is a relatively new stock here. And you had if you're so inclined to look at your daily charts, you had a pair of highs right in that area as well. So technical analysis, if you were a seller, you would have had to step out. The highs were 40.62 and 40.69. And then the other final thing that I'll add on that is, you know, look at your average daily ranges on these things. Of course, you're going to get outliers where things, you know, move, you know, 3, 5, you know, much more than expected. But a lot of times it's, you know, that if you're buying a stock that has an average daily range of 2.5 points and you're buying it up 5 points, well, yeah, that could be an anomaly, could be a, you know, expanded range day, but you don't have all that time to think of those things, especially when you're buying the wrong symbol. But that's something I like to keep an eye on for targets.
Make sure you're buying the right symbol.
Yeah.
If you're playing it, oh, it's going to be on, it's going to go up because it's going to be on Kramer. Sure as hell, make sure you got the right symbol. I mean, that's just showing the nonsense of the market that people, they hear API and they start buying API. It was like the Zoom thing, Spencer. I mean, happens all the time where they had to delist the one Zoom company because they kept buying it. Everybody thought it was Zoom, the company ZM. And it was ZOOM, had the better ticker symbol, obviously. And they had to actually delist it because everybody just kept buying this thing up on Zoom News, and it was the wrong bloody stock. Just silliness, man.
Let's talk about the stock that Spencer talked me out of buying before earnings.
I don't know if I talked you out of it.
You talked me out of it.
SFIX?
Yeah, he talked me out of it in the end.
No.
Yeah, he did.
Why don't you like Stitch Fix, Spencer?
Yeah, Spencer. Why'd you?
Okay.
Oh, man.
Was this a Lisa pick?
All I said,
because if she finds out, if she wanted to buy Stitch Fix and she finds out you didn't buy it, and she finds out it went up 37% today, Joel, you're going to be sleeping in the doghouse tonight.
All I said was
Lisa pick.
All I said was their last quarter was really bad, and I don't know how many people have the budget for new clothes right now. That's all. That's all I said.
Apparently, everybody.
Apparently, everybody. Yeah, it was a great quarter. Their
yeah.
EPS was 9 cents per share versus an estimate of a 20-cent loss. So they're expected to lose money, and they made money. Sales $490 million versus $481 million. They said that active clients was up 10% year over year. They're at nearly 4 million there, and they poached an executive. Their new CFO is
from Amazon. Yep. No, I said what I originally said was, well, if you're buying new clothes and you don't want to go to the store, maybe you're going to do it on Stitch Fix. Is what my simple thinking.
Well, you were right.
I know. And that thing always
simple
moves.
Works, man. Simple thinking works right now.
Up $10, down $10. You know, it always moves like that. So I don't know. New all-time high. Oh no, not a new all-time high in this thing. Wow, right back up here. This is a huge move. 52.44. You got a little seller at 50. I mean, who knows where this thing's going to stop? I have to look at some of these other stocks. All-time high is 52.44. Pair of highs in 50.50 area, but who knows if it's going to stop there. But this is what. Wow, I wonder what I don't have my other platform open, but the boy, I bet you some straddle writers are getting smoked.
I would not think it had a 13-point move priced in there. So we can quickly just go try to grab it here. Take me a second opening it up.
Okay.
And obviously the options, again, we always tell you they're not open this early in the morning. So we're looking at where they closed. If you were looking at the December 11th, which is this week, it was going, man, they people pay though. Like if you're looking,
$6-7 maybe?
yeah, it was about 550. It was
Yeah.
about 550. So I mean, they're making some pretty good money here, but and again, people are mainly just buying the calls. People never. This market is so biased to going higher, so you can look. There's a lot more calls than puts going on. So I mean, if you're only buying the one side, you're paying $3 for the calls on the 36. So you're making some pretty good coin. So
I tell you, if I did buy it, I'd be
39. You're making $10.
I would pray that this thing would open up here, and I wouldn't even care what the opening print. I would just have like a very marketable limit order in there in order to trade it off the open, because especially if you're trading the weeklies, I mean, you could sell this thing at the open and get a price better than if it rallied, another buck, just because they're just going to grind the time value on this.
Remember that you can always sell the stock short against your call. And so many people, 90% of people who buy options, maybe a lot of them don't have the money to do it, but I mean, if you got the money to do it, lock it in. So just if we want me to set it up, so you have the 36 calls, you're like, please open up here because I want to sell my calls. Why not just sell the stock short? So if you got, 5 calls, sell 500 shares short after hours. They're $49.20 right now on the bid, and you've locked it in because your calls will exercise on December the 11th. And obviously you've got the stock short. So that calls when they exercise will just net out your position. You'll be at a 0 on Monday. So, I mean, if you want to lock it in, you can always lock it in by selling the stock short against your open calls. That's what they were designed to do. I mean, the puts is exactly what it was designed to do, because, you're buying the stock. It's giving you the right to sell the stock. So you can always just buy the stock against your puts and then exercise them and sell the stock. So, I mean, you can always do early exercise too. I don't know why anybody does that, because you never know what might happen, but you can do it. I mean, they do it for dividends is usually, the only time you see early exercise, but European options have to exercise only at expiration, where you can exercise these options anytime. So don't forget, you can always just sell the stock short against your calls.
And several people in the chat pointing out that SFIX has a pretty high short interest. And I saw a few numbers. I'm seeing Spinner says 37%. So someone else that also
has wheezing right now.
Yeah.
Mm-hmm.
So keep that.
Howard signed with Siri. Did they get it, or not Siri? Sirius Satellite XM.
He did, eh?
Yeah.
They're not going to Spotify.
Nope.
Spotify is down $6 on it. Maybe Spotify's is down because
I didn't think he's going to go to Spotify.
I thought there was an outside chance. I thought there was an outside. Did that just get announced?
Yeah.
I
don't know. So
Howard called me. He wanted to let me know that.
That's breaking news.
He wanted to know that Spotify may be calling us.
Howard Stern at 7:36. So this just came out this morning. Sirius not getting much of a pop from it. I thought they'd get more. Up 1% only.
So
give
thick.
Howard some love.
So thick. Yep.
Spotify is trading down. It's down more than the overall market. So there was obviously people like me that thought there was an outside chance that maybe he might sign with Spotify. We knew he had talked there, but not to be. So,
can we talk Pfizer for a second?
Sure.
All right, because someone asked about the technicals on this.
It's held up, man. It keeps going back up. And it's still the news, and every time somebody talks about it in the media, it pops a little bit more. Relentless bid the last 5-6 days. So I'm long in the long-term portfolio. I have no trading position, but it's done some work here. And you know what? With the news flow coming and saying, the Pfizer vaccines are coming out, they'll be talking about this so much that I could just see this start getting some love from retail too and just continuing to drive it. So you know what? I think Pfizer actually, I've been a fader of a lot of these vaccine plays, but this one's just getting so much media love. It's bloody on CNBC 100 times a day. I mean, it's on right now. And Meg Terrell's talking about it right now. It's on continuously. They continuously talk about
also
Pfizer.
Today is important. There's the AdCom meeting at the FDA, so they're going to talk about this vaccine as well as I think they're going to talk not just Pfizer and
technicals here. I mean, here you're at an important area. You're trading up 21 cents here. This has been the high of the move right here. You hit that 4 days ago. You got up to 41.41. Probably a mound of stock at 41 and a half, 42. I think I maybe got to 42 one of those days, got really silly. But can I be a Debbie Downer on this stock for a second?
Please.
What are the chances are that, and I'm not necessarily from the vaccine, but what are the chances are that one person that has the vaccine dies from something? I mean, not from
very high.
It's very high.
I'm sure it's going to happen right now.
Yeah. And so, I'm no position. I own the stock a long
Just saying,
time ago.
there's a lot of all this,
Yeah.
Oh, that's why he died. It's hammered. I mean, you saw it with AstraZeneca, right?
Yes.
Did that person die or did they just get sick? I can't remember.
I don't remember if they did.
But remember they hammered AstraZeneca on that.
They paused the trial for like a month.
Yeah, they hammered it down. That's when it got down to 50 was, when they had an issue with I mean, that can happen. That's the bear thesis here, I guess. This right now, I just see every other minute it's on CNBC being talked about. So, we know how much this market's being driven by retail, the Citadel paper, and, we can just see it. I mean, it's being driven by retail. So if we keep talking about it, people are going to buy it. That's just kind of how it works when you talk about that much. One thing to get a mention on CNBC, it's another thing for it to be like a 24-hour a day infomercial for Pfizer. So
Sure.
It literally is on. It's on CNBC all the time. I'm looking at my screen. It's on right now.
Right. Well, so the reason it's on right now, though, is because, again, the AdCon meeting is today. So there's a bunch of docs that were released ahead of the AdCon meeting, and there's a bunch of cool charts. This is all in Benzinga Pro, by the way. It's on the FDA website. Just like the briefing doc for today's meeting. And there's some really cool charts. There's one really cool chart that they've gotten here where it's like they charted. So, it's a 2-dose vaccine, right? You have to get 2 shots. And they gave everyone the first shot, and they gave only some people the second shot. And the people that did not get the second shot, the chart of COVID cases goes like straight up and to the right. The people that didn't get the second shot, it's basically flat, like almost nobody got it. So pretty wild stuff. So it's going to be on all day because they're meeting with the FDA today, or the FDA is meeting about the vaccine today. So it'll be on all day today.
I mean, historically, this is just a huge move for it. Right.
Huge.
I mean, off the March low was one thing. The move off the last couple months here, and you got some monthly candles to deal with. So those are good. You're looking at long-term price action, and if you could clear that's closer to 42. So I just don't think it's just going to go through 42, go to 42.5. So use 42. If you're looking for another target, clear out the size. This is something you can look at the book, see what you got at 41.5. That's probably the reason we stopped on these couple of days, Dennis, right? 41 we stopped at, and 40. I'm sure there is. So
42's probably got a boatload there. I mean, that's where it kissed up to 41.99. I don't have my book open right now, but I would pretty much bet there's just a huge seller there. But
and then
eventually it's going to take it out probably.
Yep. And then the other monthly highs are at 44. So going back to 2019 for Pfizer. Pfizer, can you name the company that they bought that was located in Ann Arbor, Michigan?
Of course, he brings it back to Ann Arbor, Michigan.
No, I can't. But I can't say that. But I can say this. This was from Dow Jones a few minutes ago. They said that Pfizer said they could ship their vaccines as soon as they get clearance, and the clearance could come as soon as this weekend. That's what Dow Jones just reported. So
think you're gonna have the weekend pump in Pfizer again here potentially. I mean, the vaccine's coming out. Let's buy. The news flow here is highly likely to be still more positive than somebody coming out and dying tomorrow, and them stopping the trial. So I think if I'm biased just where I think it's going from here, I probably think it's going higher. I am long the stock. I've been long the stock for a decade. I trade it though, and I have no position on right now, so I can freely talk about no trading position. But I think playing it from the long side here overnight has worked for like the last week, and I don't see that changing anytime soon because this news flow continues to be positive.
All right, Joel, what's the answer to your question? Who'd Pfizer buy?
Werner Lambert.
Okay.
What was that symbol, Dennis? That might be before your time.
WB?
No, WLA.
No, that was before me, I think. How are you going back to the 80s, Joel?
All right.
I was still a young buck, still trading or still hanging around in high school and back in the. Actually, I wasn't even in high school.
Eating chicken wings.
Yeah, well, chicken wings was in the 90s, but next.
8:31, we're going to have Michelle Krebs join us in a couple of minutes to talk auto stocks, the auto industry. You mentioned off the top, Dennis, and so did I, but we had another offering last night, GrowGen.
Yeah.
The GRWG.
Yeah.
Now it's the stock offering.
Do you have a price on that one yet?
No price. It's $125 million worth of stock.
Well, that's a
sounds significant. You got to go look at the market cap. You got to look at the amount of shares outstanding, and then you get the dilution effects. I mean, sometimes it's all just math, and not that anybody does the math, but doing the math can sometimes give you an edge.
It's not insignificant because it's like an $800 million company.
So there you go. There's 48 million shares outstanding. How many are they issuing?
They said they gave a dollar amount, 125 million worth of stock. And
I mean, if you just did it like that way, you can do the 1.72 billion. So 125 million. You tie 6-7% dilution. So that's significant enough. And lo and behold, stock's down 5.5%. So I mean, math's kind of working in this case. You got to see where that price comes out, though. They dig the deal down at 30. Then it's going lower. If they get the deal down to 32, then it's probably gonna bottom here. So it's hard to be a buyer here just before you know that price. So let's find out the price and then use that as a floor for a trading, because the stock is growing. This stock is loved. I think this one sets up well, like a fuel cell, where you could potentially see a bounce off of that number. So let's find out that number. Maybe we'll find it later tonight.
This has to be one of the best performing pot stocks, huh?
It's like the US pot stock, though. Like, is it not, Spencer? Like, you think about all the Canadian ones that had their run, and obviously they busted out after. Some are starting to go again. This one, it wasn't. This is like the American one, the American darling.
It's a little bit different, right? Because Grow Generation, it's not one of the ones that I own. First off, they're like a farming supply. Like they're as far as I understand, they don't touch the plant, right? They're not a multi-state operator like the other hot pot stocks out there. That's why they can trade on the NASDAQ, right?
Oh, there you go.
They don't touch the plant. So they're
hydroponic commercial grow supplies.
Right.
So they're supplying the stuff to allow the farmers to
the thing behind the thing.
Crop.
The thing behind the thing. A few months ago they got a lot of love on Kramer back in, I don't remember, August, September.
It's been nonstop love. He's talked about it even recently. I mean, Kramer has and like I was saying, the influence he has right now is unbelievable. And he's been on the plug power. He gets on the train, and if he keeps pumping something, it continues to go. He did Grow Generation, I remember, 2 days in a row. That's when it topped out at 22, and then it had the fall after, but he didn't lay off. He's continued. Every time somebody talks about Grow Generation, he continues to pump the tires. So, and then everybody buys. So he says buy, people buy. So you got to respect
Tim Seymour.
Kramer.
Wasn't Tim Seymour on this one too early?
He's on them all. Tim Seymour is like their pot guy on Fast Money. He's been on all of them. So for a long time, and he's got some ETF. There's a Seymour pot ETF, I believe, out there.
Yeah, he's got an ETF.
What's the symbol on?
When we get Tim back on, we like Tim.
I know. Notes to Joel. Okay.
Tim's ETF symbol is CNBS.
CNBS.
I can't believe that was available. Okay.
One of the nicest people, man. You get some people and they can get a big head and they're on CNBC. I tell you, Tim Seymour, great guy.
Yep. He likes to talk sports with us too.
He likes the hockey. I like that too.
That's why Dennis likes him.
S&P's crawling back here. We had the 8:00 push, and that's when we made the pre-market low. Just hanging out mid-range on the session. We're above the low from yesterday. So buy the dip, works again.
All right, it is 8:35. Let's bring on our guest. We have Michelle Krebs with us. She is our auto expert that we go to with all of our questions. She's senior analyst at Cox Automotive and auto trader. Michelle, good morning.
Good morning. Let me see if I just had a little internet interruption here, so sorry about that.
We don't see you, but we can hear you.
Okay, I'll work on that when we can talk. So
we can talk. Exactly right. Michelle, just give us a high-level overview. We just got there. We go. We just got November sales, correct? For a bunch of the automakers. So
and remember, we don't get them everybody's now. We get some.
So recap that for us.
We saw sales momentum slow. So sales were down about 12% from a year ago, but at a lower annual sales rate, lower than October. So it was the first time we saw the sales rate below 16 million. So we are seeing slowing momentum. Now, Having said that, we are seeing a bit of a pickup here in early December, but the month is young, and usually December is a fabulous month, especially near the end as everybody crams in their car purchases near the end.
Any other takeaways as far as winners or losers are concerned, or
Oh, absolutely. So, if you look at the whole year, the interesting one is Tesla has done the best. Not just in stocks, but in sales. It's been least affected. Mazda is another one that's kind of surprising. Now, it had a bad comparison, but it's done a lot better, and it's got some products that are pretty hot. Hyundai and Kia have done really well through this. They tend to do better. Those brands tend to do better as people look for value in their vehicle purchases. And then they've got a couple of hot sport utilities that they can't keep on the lot. The Kia Telluride and the Hyundai Palisade. At the other end, brands like Fiat, I don't even know why it exists anymore. And of course, trucks are hot. Trucks continue to be hot. They not quite as much this last month, but they're at like 15% market share. It's quite phenomenal.
Not to go against the Motor City trend there, but we got a few Mazdas in the house, and they're just reliable. They're just reliable. Mm-hmm. I mean, my girls have had them.
And Consumer Reports just named them the most reliable brand in their latest report, and that's their annual survey. That's the first time they've done that. So, yeah.
Yeah. I mean, my girl, if my girls are driving some, I want it to be safe. And Lisa's had, I think, the CX-9, I think she's on like her third, fourth, or fifth one, So, well, let's just talk about inventories here. Rising inventories, that's probably going to call for some incentives. Do you see any concern over the rising inventory levels?
They're not rising to ridiculous levels. That's for sure. They've been very depleted. So what the big story this year was, the pandemic hit, plants shut down, sales continued to, they bottomed out in the end of March, early October, but then they, kind of took off, and the industry could not keep up in terms of inventory. I've never seen inventories of some numbers so low on certain models. Down into the teens when, 50, 60-day supply is typical. So then it still was pretty short through the summer, which caused prices to rise and profits to rise. But now as sales slow, the plants are running, they're, getting their footing in terms of these new protocols. And now we're seeing inventories build some and incentives coming back in, but not to, outrageous levels. We do think, the inventory will continue to rise through early next year. We had thought there might be shortages. But again, it totally depends on demand. If we get a stimulus package, we might offset some of the weakening in the market.
Michelle, based on recent sales trends, are there any is there anything that you think investors are potentially mispricing as far as the Ford or GM or any of the traditional automakers and what's reflective in their sales trends versus what's happening in the stock?
Yeah, well, I don't talk about the stock market, but it's always kind of puzzlement to me that companies like Tesla are viewed as a tech company, and GM, Ford are not. They're considered auto companies when all of them are both.
Yep.
So I think that's what's really misleading.
How often do you get asked about I don't even know how many there are now, the several dozen new electric vehicle company? And I say new.
Oh, that's a good question.
I say new
startups,
because new to us. How often do you get asked about that? These guys?
All the time, every day.
Okay.
If the number one question is about Tesla, the number one question, EVs in general, and that's going to be a really hot topic next year because there are a lot of EVs coming next year, and we'll see if consumers really want to buy them. The other thing that I'm interested in is a lot of these EV startups are going to do EV pickup trucks. Is there a market for those? We're working on some surveys on that, and we'll be able to share more early in the year. But how big is the market? Will the automakers are building them? Will the consumers buy them?
Gonna kind of combine the two things here. Consumer sentiment, how important is that?
Critical.
Up and down, and then the jobs recovery is slowed a little bit. Just talk about those two factors and how they affect the trends in the auto industry.
All right. Yeah, absolutely. I mean, the keys to selling cars are credit availability, which we have a lot of, and cheap for most people, except for subprime borrowers. But consumer sentiment, you've got to feel confident to sign up for a car loan. And we've seen it. It was increasing coming out of the worst of the pandemic in the spring, but it has been wavering of late. And of course, you got to have a job if you want to pay off your car loan. And the jobless recovery has slowed, and that is concerning. And especially because some of the jobless people are going to run out of benefits because we haven't passed another stimulus package. So and a lot of lenders have given forbearance on car loans. So when that lifts, and if we don't get a stimulus, we could see a lot more delinquencies and ultimately repossessions.
Michelle, as far as what's coming down the pipe next year, Ford delayed the Bronco, I guess, to the summer, from the spring to the summer, right? What are you most looking forward to next year?
Well, definitely the Ford Mustang Mach-E, the EV SUV that is coming out. In terms of what's the most important vehicle coming out, it's the new F-150, Ford F-150, because that is the bread and butter of Ford Motor Company. And we will start to see some of the EVs roll out from General Motors, the Cadillac Lyriq, which comes out I think in the spring. So a lot of, and then, Volkswagen's starting to roll out. It's Volkswagen, like GM, is all in on electric, no backup for plug-in hybrids. They're all in. And so we'll start to see those roll out. They've rolled out in Europe. They'll start rolling out here in the US.
I'm curious what your thoughts are on these like newer models of buying cars, right? Like Carvana and Vroom and these other companies where they're not dealerships, but these sort of, I don't know, tech-enabled car selling platforms. Do you have any thoughts on this? I see these Carvana towers, like
they are very successful, and I will tell you, especially with young people. I mean, young people are flocking to Carvana. But I will say, one of the things we survey consumers every year, and they always say, we want to do more of the buying process online. And the industry has not really hadn't done much. Well, the pandemic hit, and the only way you could sell vehicles was to do a lot of the process online and do pickup and delivery. That is not going away. Those consumers that we have surveyed are very satisfied with that kind of way of doing business, and they want more of it. So they will be demanding in that in the future. And dealers know that. They're telling us they know they have to do a lot more of that in the future. So whether that can compete with Carvana, we'll see.
We're on the line with Michelle Krebs, Senior Director of Automotive Relations at Cox Automotive and Executive Analyst for Auto Trader. Michelle, I just wanted to talk about the recent move, and this kind of flows with what we were talking about with the GM and the dealerships. Wanting to push the Cadillac dealerships, wanting them to, push for more of the electric Cadillac. And Spencer and I were talking Cadillac. People like that big old gas guzzling car. Do you think that this is going to be a consistent trend, or do you think that this is just a one-off with GM?
Oh no, GM's all in. I mean, it's invested its future, and it just upped that bet recently. They have increased their investment in EVs and autonomous vehicles. But Cadillac is destined to be an all-electric division before any of the other GM divisions. So they're all in. On the dealer side, what they have done is said, if you want to sell Cadillacs and EVs, you have to invest a couple $100,000 in your dealership to get ready to do that. Because it is going to take something different to sell an EV, especially on the personnel side. And about 100, according to the Wall Street Journal, about 150 Cadillac dealers said, no, we'll give up our franchise and, not make that investment. So, the Detroit 3 have more dealers than the imports do. So.
Oh, I think we lost Michelle. I only had one more question for her anyway.
That was the that's the internet there.
That's
She's-
The other things they have a lot of rural deal
got you
areas.
back, Michelle.
Anytime.
We
Oh,
got you back.
we
missed you
just
for a
lost you there
second.
for 1 second. Yeah, because the internet
because
cut
my
out on
internet's unstable. So
Yeah.
What internet service do you have?
you. Joel wants to show your internet. So
No, I'm
you don't have
joking.
to say that.
it just doesn't like these big, video things.
Right.
That's fair enough. Michelle, just last one question from our chat. Do you track? Well, of course, you track used car sales.
Oh, the used car business. Yeah, that's the heart of our business at Cox Automotive because
Right.
we have Manheim Auto Auctions and
Right.
Auto Trader, of course, has lots of listings for used cars. That's been a really interesting business. It came out of the pandemic far faster. The recovery's been far faster through the year. A lot of it's because, the affordability of vehicles is difficult and people are opting for used cars. The average selling price is getting very close to $40,000 for new vehicles. And so, a lot of people are frozen out of that market, especially because some of the automakers have gotten rid of less expensive cars instead of SUVs. So where do they go? They go to the used car market. That's why Carvana and Vroom have done well. And you're seeing the automakers, Honda just announced yesterday, they're going to list all of their used cars across the country on their websites. Ford is doing something similar. So there's a much more focus on used vehicles, and it's really good business for dealers.
We haven't really talked about, self-driving cars at all during this conversation. There was news overnight that Uber is exiting out of that business. Question for Chat about Motional. I don't know if you know them. There are so many of these companies that are just working to enable this technology. Are there any you think are furthest down the road? Or
Waymo is by far.
Okay.
Yeah. And then, GM's made a great progress with Cruise. Ford has with Argo. And then there's, some other little companies. I think, it feels to me like autonomous vehicles, at least in the media, maybe I know there's a lot of work going on behind the scenes, but it's kind of been put on the back burner through the pandemic. And the focus has been really on electric vehicles because they are coming so quickly. So, but, autonomous vehicles will be out there. And I think we'll first see them in commercial fleets. I think that's the other thing we've seen is a much more sensible, practical business model around AVs evolving.
Yeah. All right. Michelle Krebs, as we said, she's the Senior Director of Automotive Relations at Cox Automotive and Executive Analyst at Auto Trader. We always appreciate your insight, Michelle. You come super
well prepared. I'll tell you, thank you so much, Michelle. Really appreciate
Happy to do it.
When you come on.
Technology to work.
Great information. Really, thank you. We really appreciate it. You have a safe and healthy holiday, and we'll be dialing you up in January for sure.
Sounds great. You too.
Thanks a lot, Michelle. All right, 8:48 here. Did I just see any Pfizer news, or did I?
UK, the first person that's got their dose there in the UK. It was a 90-year-old lady. They tried on the 90-year-old lady first. See how she does.
I mean, it kind of makes it makes sense because if it backfires,
Well, she was 90.
I'm gonna sneak in the facility where my mom stays, and get in there and say, yeah, you don't need that, Mom. I'm gonna take it.
You're gonna go take Joel wants to be the first one here outside.
I signed up for trials.
I know. I can't believe Joel would have did the trial.
I would have done the trial. Yeah. What the hell?
Yeah, I'm in good shape.
A lot worse
thing. This on.
Would you not take a flu vaccine? I mean, come on.
Well, the flu vaccines take years to develop, not months. So that's a little bit of the reason I'm a little spooked on it.
Well, you don't have to worry about that for 5 or 10 years.
So what about the kids? I mean, I heard they were going to try it on the kids. Like, how do we know, 40,000 people in the trials and stuff, assuming no young children? How do we know how to how it's going to react with children? Is there going to be?
We know. It's one of those things we're going to have to roll with it.
But just inject your kids and hope for the best. Okay, we'll do the math. 30 pounds, kid takes 8% of the dose. Let's see what happens. I don't know. Sounds scary injecting your kids with to be the first one, but okay. Anyways, we don't want to talk that.
Enough of Pfizer for the day. What else was on our list here?
I have a huge list of one SPACs, but 2 is stocks that are going to report this week too. We're going to get Chewy tonight. That's going to report. Predictably, it's trading up because this is what these stocks do. They trade up ahead of the reports. You've also got
Gamestop tonight.
Gamestop tonight, which everybody will be watching that one. I mean, the stock has had such a run, such a comeback from when it's been in the gutter. We've hated the stock forever. So obviously, I didn't catch
Lisa bought a sliver of this against
she's oh yeah, I forgot she bought GameStop when you didn't even know about it.
Because
Joel hates it, but I'm buying it because Joel's gonna be wrong on this one.
My nephew Hayden crunched the numbers on it and he liked it for some reason. I'm not sure.
I mean, the numbers weren't ever terrible. It was the fact that the business was declining. And the business is still, I think, in secular decline here, but they've got a little hope here. It's the reopening play. All the dogs are barking, and this dog is
this is what's going to happen with this one.
Tell me what's going to happen. They're going to report earnings tonight. What's going to happen? Predict it for me.
Predicting. This is not investment advice. It's going to get crushed in the pre-market down to like 1378. Excuse me. I stand corrected. 1378.5. 0.65, and then it's going to hang out. It's going to get back to 14, and then it's going to hang at 14 for like 3 weeks, and then everyone's going to.
You predict 3 weeks out. I like this.
Yeah, and then it's going to hang out, and then it's going to turn higher. And then someone's going to come out and say, "Oh, I bought more of this," some director somewhere, and then it's going to explode to the upside again. That's what I think.
That could happen.
How'd
you like my toll call yesterday?
That we could say that we should just have all the home builders pop and drop.
That's what they do. We literally spelled it out for you. We got this one spot on. And I mean, it's just looking at history. What do? They come up with a big beat. The algos all buy the initial number. They rip it higher, and then they start to leak it. And that's exactly what they did. It popped. I actually sold the pop short and played it. I made $1. I was way too early, so maybe a little less than $1 actually. I right in there though. I think I missed a 50. It was you had to be out there, and I was like, I'm waiting for it to start to turn and slow, and then I had to get it down in the lower 49s, and then it ended up going down in the lower 48s, and I covered that big purple candle. I covered somewhere in there. So I did play it. I was like, I'm gonna play this, and I played a small size just for fun. We're trading these earnings stocks. Don't trade them with big size because they can really move around. But I was like, I talked about it. Let's try to see if it'll work here, because I thought that the pop would get faded, and it immediately was. And now it's down here again. So people will try to find a fundamental reason for it. But the reason is that this company is, it's like the environment is just as good as it gets. I mean, and people aren't expecting it to continue. So the CEO was on there just saying this is the best market he's seen in 30 years. People are, it's for all of the reasons. Low interest rates, people moving out of apartments into houses, people building houses, people caring more about where they live because they've been stuck in their homes.
There was not enough supply.
There isn't.
There are I had enough houses.
I had somebody knock on my door 2 days ago. I'm living at my cottage because I sold my main house, and then I had another house fall through on me. So I'm literally living at my cottage. And I had somebody knock on my door and say, "Are you interested in selling anytime soon?" I was like, "No, we're actually going to build on this property." But anyways, I mean, that's how desperate it is. People are actually going around door to door and asking you if you're interested in selling your home. There's no supply out there. People are desperate. And every single house that you go, you go and you buy a house. And I mean, there's multiples. Like when I sold my house in Windsor, we had 9. We was listed for 7 days, and we didn't take any preemptive offers. So we got them all on the presentation day, they call it. And 9 people trying to buy the house. 9. I mean, and it was way over ask. So it probably, if you leave it out there longer, it'd be more people trying to buy. There was somebody even trying to call in at the last second. So it's desperate times for people, to try to get a home right now. It is a seller's market. If you ever want to sell your home, you ain't getting a better market right now than to sell it.
Can we talk about Smile Direct Club quickly? Joel, can you tell us what happened on April 28th to SDC? Because that was the day, that morning at least, they were awarded a patent for basically the way they run their business and the way for their retail concept, essentially, is what they're awarded a patent for on April 28th. Well, that was in April. Yesterday or overnight here, that patent was invalidated.
Yeah.
And they've lost their patent for essentially it's the way it's the retail model, essentially, is what was patented. And judge has said, no, not going to patent that for you. So that patent was invalidated. That happened last night. And I remember the stock going up on this news. I don't remember if it
539 to 671. That kickstarted it.
Okay.
It had a close. Yeah, it was right near the. I mean, you got to think about that too. That was also like market bottom time too, right? So that's what it did, and then that was the That kickstarted it. It was 539 on April 27th. And by May 11th, it was over $9. Got a little rocky after that, but let's see how it's trading today.
Well, here's a question for you.
Got
Is
an
this
upgrade,
not
too.
bad news?
That's what
It is bad news. They got an upgrade.
Oh, they got an upgrade?
Yep.
I don't
So
understand.
they get hit last night on this news, and then somebody comes out and upgrades, and now so this traded under $10 last night. This traded under $10 last night.
$9.80. Yep.
And obviously the upgrade trumps the bad news.
I haven't seen the note. I see the upgrade. I saw the headline that they're losing their ruling on the patent. I assumed it was bad news because patent with the patent comes exclusivity, and now they just lost that. It's essentially they're opening up their other major competitor to do the same thing that they do. And I do remember the stock going up on this news back in April. I don't know why it's reacting the way it is. I assumed it was bad news, but I guess for now I am wrong. I don't know. I don't know why they're upgrading, why Wolf Research is upgrading them to outperform today.
I don't know if it's all, or if they just decided that this was expected. Maybe they hammered it on the headline. Like I saw it get hit, and I was like, "Oh, what's happening with SDC?" And then I saw the headline, and I never really looked back at it. But now I look at it this morning. I mean, it's gotten all those lost back, and it's trading up 5%. So rallying in the face of bad news is always a good sign. One thing I will say. Could this story, like this is a storied stock, could retail grab a hold of this stock eventually? Maybe. I have no position in it. But it's the kind of stock that could get a story cooking on it, meaning, people could say, oh, yeah, this Smile Direct. It's kind of stock that Robinhood could eventually like. So I wouldn't want to be short it. I could see it running, on a pullback here. I like the fact that it's rallying on what is apparent bad news. That's good. That's a good sign.
All right. What else we got to do? We got 3 minutes here. Do we want to do some chat? Did we get everything off our doc?
I mean,
from
we
the pre-market show
covered pretty much everything on our doc. We haven't really done.
UPS had some good news. I saw that. I just saw that flash by on Twitter. They're like, how could they not? I mean, everyone's delivering stuff. Pop one. Where did it get to? 169. This one sometimes has a hard time. On that pop, you got to 169.07. Not much. That earnings day, I don't know. This is a tough one. I don't see much on the dailies here. You got a high at 174, one at 169.96. So if you can take out that pre-market high, but it's already faded a little bit off that 169 high.
Yeah, I mean, they had a press release out this morning that said this is one of the best holiday seasons or peak seasons ever. So no surprise there. Getting a lot of questions about Palantir. I mean, it had the catalyst yesterday.
Wow. Dennis, did you sell that thing yet?
I'm still in it.
Contract. I
bought that dip. I got this one perfect, 22.5. I mean, 21.15, I guess would have been perfect. So I got it up $1 from there. I bought it because I was like, I think the story is still going to eventually get hot again. And I didn't think it was going to get hot 4 days later. So it's a little overdone. If you're buying it now, you're chasing it a bit. I think it's going to make new highs, though, so I'm going to hold on to it.
Yeah, I'll just give you the all-time closing high on that one. And I believe it was 29 something, 29.04. 29.05. So way above that. Now, nothing on the dailies to look at. The all-time high 33.50 is going to take a little bit of juice to get there today. They did have some good news yesterday.
All right, 8:59. I want to remind you all that the Benzinga Small Cap Conference starts today. It's a 2-day conference. I'm putting the link to network with the executives in the chats. It's a free conference. It'll be on our YouTube channel. Presentations throughout the day, today and tomorrow. A dozen public companies presenting today, a dozen presenting tomorrow. They include names that you've heard of, names like Ideanomics, IDEX, which is the top of my filters every day, Sorrento, let's see, who else? AYRO is presenting, Electromechanica, Solo. So some big names there.
Are you going to hit them with the bad news now, Spencer? The bad news?
The bad news is that there will be no afternoon show for Joel and I the next 2 days. So for today and tomorrow, Joel and I will not be on from 3:40 to 4. We have been preempted by the Benzinga Small Cap Conference, and that's okay because I want to watch that anyway. So that's the bad news. Anyway, 9 o'clock. Let's get off here. Thanks to our guest, Michelle Krebs. Thanks to all of you in our chat. We appreciate all the comments, all the super chats, all the participation. Please remember that all the information from our show is meant to be used as informational purposes only, not for investing or trading advice. And the opinions of our hosts and guests do not represent the opinions of Benzinga. Everyone have a good rest of your day. We will talk to you tomorrow morning. Good luck in your trading.